What's up, YouTube? San Pedro Silver here with another edition of the Daily Dime. I showed up to my daily stop at 7-Eleven, and last night somebody was desperate for a pack of cigarettes, according to the cashier, and I got a Silver Eagle for 20 bucks. So the guy got his cigarettes. Cashier made about 14-15 bucks, and I saved about $10 or so. So we're all happy. Anyhow, above the obituaries, this article is placed perfectly right above the obituaries. It says this is with regard to California on Tuesday, July 17th, 2012. It says state pensions fund earns just 1%. I wonder why. So, for the past 20 years or so, I guess CalPERS, that's the name of the nation's largest public pension fund, collected a dismal 1% annual return on its investment, falling short of their projected 7.5%. Now, the thing that I find funny here is that, okay, they've been projecting 7.5%, but for the past 5 years, CalPERS earned just 0.1%. Now, over 20 years, they have averaged 7.73%, which is fine. But a lot of things have changed since the housing market, since the housing bubble, and now these guys are all in public equities, right? So these guys are putting their money into things that are obviously losing value. We know, like the Dow against silver and gold is losing value big time, but they continue to invest in these kind of equities. And we all know that when stocks, bonds, real estate, and other pension investments don't reach their targets, the difference has to be made up. And who's it made up by? You got it. You and me, the taxpayer. So, we're going to be experiencing this problem for a long time to come. This guy's Stenbakken, he seems to know what's going on. Funny thing is here is that the chief investment officer of the CalPERS fund says it does imply that we're going to have to employ new strategies in terms of where we invest and how we manage risk if we were to retain the 7.5 return target. Well, duh, this article right above the obituaries wouldn't even be written if you guys would have reached your target. And for the past 5 years, you haven't. Why would you continue to think you're going to get a 7.5% return on billions of dollars? How much is the fund worth here? $234 billion in the system, with 1.6 million state employees, school employees, and local government workers. For the past 5 years, you haven't reached anywhere near 7.5%. I mean, it's crazy. So they go on here. While tax officials blame weak tax revenues and the loss of redevelopment funds, they also cite escalating pension costs as a contributing factor. Yes, they have to take in mind that there are baby boomers. There's a lot of people who were teachers, city workers, people that work for TRW and other aerospace companies. A lot of these people are retiring, and you know, the taxpayer used to take one taxpayer to take care of 3 or 4 or 5 retirees with regard to what they take out of your paycheck. Now it's like one worker for every 2 retirees, and I think 2.5, and that obviously is shrinking. I mean, it's crazy. It's just crazy. So the liability for CalPERS is around $85 billion, and the California State Teachers Retirement System is short by about $64 billion, $64.5 billion. Who pays that? We do, the taxpayers. So this is just ridiculous to me. I mean, there's cities going bankrupt left and right. I mean, not left and right, but there's been at least 3 in the news lately that have either claimed bankruptcy or are on the verge of bankruptcy. Being Stockton, San Bernardino. There was one other one that I can't think of at the moment, but there's been 3. Oh, then that other city in Pennsylvania that's not in California, but I know that there's been 3 cities, and there's a lot of them that haven't just said anything yet. You know, they're trying to cut back furloughs, days off, furloughs, giving people some kind of deal to retire early, but then they want to raise the retirement age to 67. So they want us to work longer for less money, and then you get less, after contributing for all these years of your working life, you expect that you could live like a normal human being, and most people can't even eat. I mean, things are not getting good. Things are not getting better. We all know that. Recovery is it's just, there is no recovery. There is no recovery. These kind of articles come out on a daily basis. Things are not getting better right now. I wish they were, but they're not. So, anyhow, they're getting better for me because every day that goes by, I'm able to acquire more and more real assets. So, but, I would rather the society at large be doing well, because then it makes everybody richer in every way, shape, and form. When people are working and able to feed their family and take trips and buy things, everybody's happier. We just have a better, life is better overall. But I am going to try and capitalize from people like Joe Deere. We're not actually capitalizing. We're actually on the hook for this stuff. But I'm trying to capitalize from these people that keep these prices down in terms of the precious metals. I'm going to acquire as many of these things as I can for as long as I can. And once they realize that this sort of stuff cannot be maintained. Oh, somebody's screwing around here. Anyway, once they realize that this stuff can't go on much longer, there's going to be huge reforms, huge changes, and then I think people are going to really start waking up to precious metals and other hard asset type investments, because the Dow, like we all heard recently, the Fed admitted that if they weren't injecting or pumping money into Wall Street, that the Dow would be worth about half of what it's worth. That's pretty scary. So anybody in paper, anybody in equities, good luck. I hope you know what you're doing, but I'm staying way clear of that shit. So anyhow, that's about it for today. I just wanted to make a little video post here about things going on in California, and with our retirement and what we have to look forward to in the future. Things just don't look good. That's not news to you folks. I'm sure anybody who watches this channel is well aware of it. I don't like to be a person that just kind of reports on the bad news, but I just want people to, I just want to be as clear as I can. Unfortunately, I'm not a very good speaker. I kind of jump around with my thoughts, and I apologize for that, but I just want to make people aware of how things are being done. Other people that don't live in California, they hear stories about cities going bankrupt and whatnot, and When there's things going on in other parts of the country and the world, and there's other people that actually live there and report on the issues, I really appreciate that kind of stuff. So I hope people, like the idea that, people like me from California are giving our 2 cents on our thoughts on what's going on, and it's pretty scary. It's pretty scary. This is never. I mean, I'm not that old, but I'm old enough to know that this is pretty scary. Just do what you guys can. Get out of debt. Get out of debt and get out of debt, and start acquiring hard assets if you haven't already. And we just gotta wait and see what happens. I mean, it's really all we can do. Just prepare. Prepare if you dare. All right, San Pedro Silver signing out. Hope you enjoyed the latest version of the Daily Dime, or the latest episode of the Daily Dime. Okay, take care. Thanks for watching, folks. Rate, comment, subscribe. Thumbs up if you like it. Thumbs up if you don't like it. Peace.